What's up, you guys? It's Matt here. So the crypto market did not look good for the past maybe 24 hours, the past 2 days, really. We haven't seen great movement. If you're talking about making money on the downturn, then yes, it could be great movement for you. But for a lot of people, we're not seeing positivity, and we hope to see that positivity. So anyways, I wanted to talk about the crypto market and why things fell, why we're seeing things plummet like Bitcoin and Ethereum and Terra Luna Classic and Shiba Inu and everything that's happening there. So I wanted to dive into that a little bit. So before we get started, make sure you hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. Also, make sure you guys check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter at Perry8K, you can follow me over there. Don't forget about some of the other links that are down there for my referral links and also my Patreon if you guys want to sign up for that. We do a lot of things over there and, want to, move a lot of stuff from YouTube over to Patreon and do something big over there that's more of a centralized group, more of a smaller group to communicate to. But anyways, guys, let's go ahead and dive into this. If you didn't know, the crypto market fell quite a bit. We're seeing this at a $1.01 trillion market cap, as opposed to the 1.06 or 1.07 trillion dollar market cap that we were at previously. But we fell quite a bit. Bitcoin is down to 21,700. You're seeing Ethereum down to 1,500. You're seeing BNB that's down to $309. You're seeing Cardano that's down to 36 cents. You're seeing Dogecoin down to 8 cents, Solana down to $20 and 38 cents. You see it down 17% over the last 7 days. Dogecoin down 12% or 13% over the last 7 days. Ethereum down 8%, Bitcoin down 7%. Obviously, you can see the markets are not looking positive. They don't look good at all. And we want to know the reasons as to why they are falling. Well, one of those reasons, and I'll get into it before we get into I guess the main reason hovering around why we're seeing it happen now rather than later, is right now we're looking at the CPI data. Now, CPI data typically a couple of days out. It's like 2, maybe 3 days out. We see a plummet or a reaction depending on what people think is going to happen. So if we see an increase in inflation, obviously we're going to see the market start to take a dive. Or if we see a thought of an increase in inflation, we're going to see the market start to take a dive. Well, that's really the thought process, but we're more than 2 days out. We started really falling 2 days ago when it was around, I think, the 9th or the 10th or something. So 1 to 2 days ago, which means that we're not really in that inflation window right now. So what really happened? Now, if you didn't see my video over on my reaction channel, I talked about Kraken and how they're being investigated by the SEC. And apparently that's kind of one of the main targets because you see that a major exchange is paying $30 million for a settlement to the SEC, which means that it's like, oh, well, is there something to hide? Is there something that they found? Is there something that, they're violating? And do we need to take our money out of Kraken? And you're seeing, different stuff that's happening there. So obviously, it's creating some more fear like you saw with FTX. So the Security and Exchange Commission cracked down on cryptocurrency services that offer user returns with their latest regulatory move Thursday night. The SEC is calling for crypto exchanges to end their staking as a service program. The agency charged Kraken with the third largest exchange by volume with selling unregistered securities. Bitcoin price tumbled to three-week low as cryptocurrencies fell on the news. The United States-based Kraken paid $30 million fine, a $30 million fine to settle the charges. It also announced an end to its yield generating staking services. Kraken launched its staking program in 2019. It advertised annual investments returns as much as 21%, according to the SEC. In staking services using a lockup, their funds in staking services, users lock up their funds in exchanges to reward or for rewards when their stake tokens are used to validate blockchain data, which is crazy because in what they typically do, and that's how really cryptocurrency is working, right? You're getting something to be able to lock up and validate the blockchain data. That's another way to validate. And if you're not gaining anything to stake, what's really the incentive on staking? To validate the chain? I mean, there's a lot of people that just want to be able to gain something, not just validate something, right? It's not about that. It's about more, the bigger picture. Um, in an announcement, I can't even highlight this. In an announcement, the SEC chair, Gary Gensler, said that crypto intermediaries need to provide proper disclosures and safeguards when offering investment contracts, regardless if it's through staking as a service, lending, or other means. Today's action should make clear to the marketplace that staking as a service provider must register and provide full, fair, and truthful disclosures and investor protection. So this is more than just like, oh well, you have simple violations. This is affecting the users, the investors as well, and people that are going to be upset with the fact that you're looking to ban staking. And we've seen this conversation that's happened quite a bit. And I've had a couple of videos on banning staking, but not to know that this was the main reason as to why they had those violations there. And to pay $30 million is huge, right? Following the enforcement action, Coinbase, the top U.S. exchange, said that its staking program was not affected by the news. What's clear from today's announcement is that Kraken was essentially offering a yield product. Coinbase chief legal officer Paul Grew, I don't know how to say his last name, wrote in a statement shared with the block. Coinbase staking services differ because its returns are based on rewards paid by protocols and commissions the company discloses rather than the set yields. Rules making clear these distinctions would provide real clarity to consumers, investors, and the industry. Many industry experts have called for greater regulatory clarity over the space, saying uncertainty is causing the U.S. to fall behind. And obviously, I think that's sort of true. I do think you need some sort of regulation, but you need to understand the difference between maybe what's staking as a service versus something else. So anyways, this is pretty big news, right? This is the reason why you see the markets falling. It's not because of inflation yet, and there is still an expectation that maybe inflation is going to rise, but it's much more than that, right? Because now you have people that are like, well, I don't want to be caught up in this. If they're looking to cancel the program or something happens to an exchange because they're getting fined by the SEC or something, they're paying $30 million, which is not a little bit of money. It's a lot of money, even though Kraken can afford it, even though other exchanges can really afford it. It ends up hurting maybe some of these smaller exchanges that you may be a part of, right? And they end up having staking and they do it the wrong way. They define it the wrong way and may end up sucking for you. So anyways, guys, hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. We're still seeing the market kind of in more of like a consolidation / maybe a little bit of a recovery phase in the last hour, the last day. So it's good to see some sort of leveling out rather than a complete fall. But anyways, guys, hit the like button, hit that subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter at Perry8K, you can follow me over there. But I'm going to get out of here and I'll catch you guys in the next one.